Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Monday, February 26, 2024. So we did see a little bit of selling today. S&P was down 20, but it really, honestly, just looks like it's just doing a bull flag here or consolidating. There's still some risk that this was a final five, and we're going to do some type of backing and filling, but the 15-minute chart, what I suggested yesterday was we're going to see some, a little bit of backing and filling. I said we could even come down somewhere into I thought there might be some buyers at the 50-80 level and then pop back up again. But if they continue this, we have the 50-50, that is some pretty good support. Most likely we're going to get pretty close to the moving average being there. So either anywhere between the 50-50 and then the 50-37. This is really your support levels right here. But if we do come down, if we come down there, it would make sense because I'm not really even counting these the wave structure just from where we are here. I'm more looking at the either this was a five or we're going to complete a five. But for this particular reason, where we had the bearish divergences on the 15-minute chart, and if we look at the hourly chart. We don't have any. That's why I'm saying that I said last night where, if we get a pullback, it's most likely just going to be a pullback because we don't really have any sell signals on the 60s. And, typically if we just go back and look, we don't really make any we haven't made a top in a really long time when we didn't have any bearish divergences in place. So, just going with the odds on this one, this most likely is not the high. Now, again, it doesn't mean there's no risk in this market. Absolutely, it could. I'm just saying, looking at the chart wise and what we've seen in using history as our guide. So really, this is going to be the important line in the sand. This 50-40 level, because you can see it's the 50-day moving average. We got this support right here, and if we lose it, then we're probably going to see a quick drop down to the 49.50 level because there's not a whole lot of support here. We have the 49.41, which is the 200-day moving average, which heck, this thing hasn't even been tested fully for quite some time. But if we look at the 15-minute chart, again, we have the 50-37 and we have the 50-40. So that's really going to be your support line. I could even move this up and say it's right here. And if they lose it, there's nothing else because remember, this is a gap up here. So this, the bare minimum I would be anticipating is 49.83, but more likely coming down and testing these lows. Now, that's if we take out this support. If we, if it holds and we come up, then we're going to get some sell signals on the hourly chart. And what we've pretty much gotten from that has been 100 to 150 point drop. That's about it. I don't know if things are going to change. They could, they should. But, at this particular stage, the bulls have been pretty relentless. So those are really it. If we get above, if we end up breaking back above what this line is moving up, so we'd probably be looking somewhere around that 51.40 as a possible top, but that's only if it's going to follow this. Doesn't mean it has to, because we did touch it, so we could just come up and miss it and then maybe head down. But if we're going to go up, this would be the area that I'd be looking at. And again, if the bears can get through this support level, then we're probably going to see a quick move down to the 49, say 83, with a possibility coming down to the 49.45, which would be the 200-day moving average here. So that's really the what the setup is right here on the markets. Now, I want to go over a quick thing because I've been bombarded with emails about the that options mastery thing. So I want to show you, just to give you an idea of what this is. So this is, I told you that I'm helping my friend out, and he has a pretty large portfolio, and he has the Microsoft and Meta are his two big ones. So basically today, I've been doing the weekly credit spread for him, and I put it in today. And basically what it is, the trade is that Microsoft isn't going to go below 400, or it's not going to go above 420. So as long as it stays in this area, he's going to be able to keep the premiums. Now, let's say that Microsoft ends up, it crashes. With the stop is in place right here, where the only thing that will happen is he's going to get stopped out of the put trade that he sold, but he's going to collect the premium for the call, and it's a break-even trade. So that's kind of what I was saying, where it's not, it's as close to a riskless trade that there is, just the way that it's set up, and it's not something you can just go throw out anywhere. There's certain things that I'm looking for, and it's it's been working out for him. And like I said, the worst case for him right now is going to be if if he just gets stopped out of one side, and then he just breaks even for the week. So instead of making the 10,000 that he's been making, he wouldn't make it for that week. So that's really the risk on it. Now, the other piece that I have going with him, I'm sorry, that's not the one. So Meta. So Meta, this is a daily chart, so it looks a little bit smaller on it. But actually, you know what? I'm gonna show you. So what we have is basically this trade is that Meta is not going to go above 505, and this is by Friday, or below the 460, I believe it is. I'll show you in a second. But as long as it stays within this, again, by Friday, he keeps the premium. So this is what we've, this is the entry part that I did for him. So you can see I sold it was the 462 Meta, so that I had to move that up a little bit. But so it was sold for 86 cents, and then the call was sold for 93. So this is possibly his premium that he's going to get on this, and multiply that times 40, and that's how he gets the the $10,000 a week. Now for the Microsoft, it was 420. It was 70 cents each on this. So he can, if you do the 40, it's 2,800, and then 40. All you do is multiply 40 times these, and that would be his premium on it. But as I said, if it goes above it, then they're also above or below. The only thing that's going to happen is he's just not going to make any, he's not, and that's if both of them end up going above it or below it. If one does and one doesn't, obviously he would just make a little bit more. If they both do, then he would get stopped out at a break even, and you just wait for next week. So that's pretty much what I'm training right now, and I'm going to be incorporating it into the what am I talking about here? The sentiment stuff, where I'm looking with the sectors, but that's probably not going to be anything to do with the this option strategy thing that I'm working on. And I know I said it has to be with huge accounts yesterday, but I'm testing something else out. I put a lot of time and a lot of kind of money into software and figuring this stuff out, but I'm trying to find out one other way to do it, where you can actually, when you sell the put, and then you could buy a put underneath it, and what that does is you don't have to put the money up to buy the stock if you get stopped out. So if you just have the put here and it goes below it, and let's say if you didn't have a stop on it or anything like that, even if you have a stop but it gets traded below this, what the market, what they do as far as your brokerage is, if you end up having to buy this stock, you have to buy if you bought, let's just say 10 shares to make it easy. 10 is 100. It's 10 is going to be 1,000 shares. So you're going to have $481,000 in your account. Now, if you did it on the top side, it's going to be the same thing. So it makes it pretty big. But the way that I'm looking at it with this, the credit spread, is that if you kind of just give one that you're going to buy it, but you're going to buy it at a really low price, and you're going to keep the same strategy that I'm talking about. But what happens is you don't have to then put up it doesn't have to be $481,000 you have to have in your account. It just has to be the difference from the point A to point B, and it makes it a lot less overall. But anyway, like I said, I just wanted to kind of explain what's going on because I'm getting a lot of questions about it, and it's it's something that is I'm really going to start teaching on this because right, and my friend is just very excited about what's going on, and it is a way that I'm kind of comfortable teaching what I'm doing. So with that, have a fantastic night, and I'll talk to you guys in the morning. And if you guys want to chat, just click on the link. I will do some explaining on this, on how it works, and what I'm going to be doing. So have a great night, and I'll talk to you guys in the morning.